Ladies and gentlemen, welcome to It's Rainmaking Time. This is Kim Greenhouse. We are welcoming back Ellen Brown, the author of Web of Debt, The Shocking Truth About Our Money System and How We Can Break Free, and the chairman of the newly formed Public Banking Institute, Banking in the Public Interest. Ellen has been on the show 4 times in the last year and a half. We're bringing her back today to talk about the S&P downgrade, the Bilderbergers, her newly formed Public Banking Institute, and what her concerns are today and how far along public banking has come. Ladies and gentlemen, welcome Ellen Brown back to It's Rainmaking Time. Good afternoon.
Thanks, Kim. Great to talk to you again.
Let's talk first about the formation of the Public Banking Institute. I'm very excited about it. You moved rather quickly to form that, even though it may have taken many years of thought. In January of 2011, this nonprofit organization was formed. Share about its mission with us, and what's your vision for the Institute?
Well, I started writing about the idea of states forming their own state-owned banks on the model of the Bank of North Dakota in the fall of 2008 after the Lehman Brothers collapse. I had heard at an American Monetary Institute conference, I just asked if there were any publicly owned banks, and somebody told me, oh, well, there's one state that has one, North Dakota, but it operates pretty much as an ordinary bank, so it's not really the model we're looking for, something more radical. But I looked into it, and I thought that North Dakota did a remarkably good job of maintaining. Well, they basically escaped the credit crisis. As time went on, then in the next 2 years, I kept following them. At first, there were 4 states that had never gone into deficit, and then there were 3, and then there were 2, and then there was only 1, and that was North Dakota. It was the only state that actually totally escaped this credit crisis. They have a budget surplus. They've had a surplus each of these years. They have the luxury of cutting back on taxes, adding new programs. I mean, it's the opposite of what everybody else is talking about. Should we raise taxes? Should we slash services? In North Dakota, they're lowering taxes and adding services. They have the lowest unemployment rate in the country, the lowest default rate on loans. Not a single bank has gone bankrupt in at least the last decade, according to the FDIC. So they have some remarkable things going on. So I kept writing about it. At first, I spoke about it at a conference in Michigan in, I think, maybe November of 2008, and then I wrote articles, and I got overwhelmed with email, and I was complaining to a friend that I couldn't answer all these emails, and he said, well, why don't you start a Google group? So we did. It's invitation only, so it's people that are really interested in the subject, and we have 200 people in it, so that we had this very active Google group that was discussed all these issues, how you would set up a bank, what was special about public banks. So we kind of nailed down how you would go about it, what the precedents were. We did a whole lot of research, and we argued among ourselves until we had all those details ironed out. And then last December, I gave 3 presentations up in the San Francisco area. And while I was up there, somebody said, well, why don't you hold a workshop? And so we did. We had a workshop of, it was largely just to meet the Google group, people that happened to be up there, but we invited some other people as well who were movers and shakers. And we got this really dynamic group. And just on that one day of the workshop, we decided it was time to do something. And so we decided that we would start this institute, which we did. At that time, I think there were 4 states that had, it's either 4 or 6 states that had bills pending for state-owned banks, which I think was instigated from my writing because there weren't any before that. But since we formed the Public Banking Institute, there are now 14 states that have bills pending either to form their own banks or to do feasibility studies to see what the possibilities are. So, and one of them is California, which we're really eagerly and actively working toward. So we're all volunteers. George Soros isn't backing us, no Koch brothers. We're just people committed to do something. But since I've read so much and researched so much on this subject, I know that's how all popular movements work. It's just people coming together that feel a sense of mission or a sense of we must do this, and then they buckle in and do it. I mean, it's so interesting to feel like you know what the solution is and you've got to get out there. And that's what I do. I write articles all the time and try to clarify, there's an initial resistance. First of all, you're going to get the professional resistance. Wall Street is not going to like this idea because we'll be taking their business. So the big moneyed interests aren't necessarily going to be on our side. And then from ordinary people, if you say, you couldn't just walk into a supermarket and take signatures for an initiative, because people would say, what do we need another bank for? Or I don't believe in banks, or I don't trust banks.
That part would sound legitimate, given what's happened. I mean, I could understand the initial resistance and the reluctance to imagine that a bank could work for good. I'm sure you understand that.
Yeah, well, but that's what I mean. You have to lay the groundwork. So there's a lot of work to be done. It's not like something that everybody has an opinion on already, like abortion or something like that, where you can take signatures and they know what you're talking about. Here, you've got to chip away at the concept itself. Also, people will think, well, you're going to be creating money. That means you'll be inflating the system. But that's not true. Banks create all of our money, but they're private banks. We, the people, should have that privilege and that right, and we're giving it away to private bankers who are not returning the favor. We've supported Wall Street, and Wall Street did not turn around and support us. In fact, they're exploiting us.
I heard your interview with Peter Schiff many, many, many months ago. He hadn't read your book. He was yelling at you in the interview. He was saying that all you're recommending is the printing of money, and it was a complete de-gutting of what you're trying to do. Can you just explain that one little part for people that may translate public banking as a cause célèbre as just a printing money machine? Explain the part that most of us won't understand about why it's not about inflating anything.
Well, all of our money, except coins, is now created by banks when they make loans. We're not talking about doing anything that isn't already happening. Banks create all of our money. They create loans in response to a demand for loans. So the loan is paid off. It's really just you're creating a debit in somebody's account or an overdraft in somebody's account, and then they pay it back over time. So it all zeroes out in the end, except the difference is the interest doesn't zero out. So say somebody comes to the bank for a mortgage. So they bring the mortgage, which is a piece of paper that they sign, promising to pay this obligation back and using the house as collateral. And so the bank puts that mortgage on one side of their books and says they have an asset of, say, $500,000. And then on the other side of their books, they have a liability of $500,000 because they have to make good on this check that you're going to write to the seller of the house. They'll get that $500,000 back, but they'll get another $500,000 or so back in the form of interest. And that is not created by the bank. So it has to be gotten by somebody else taking out a loan somewhere else. Since we don't make that many coins, we only make like $1 billion worth of coins for something like a $15 trillion money supply in dollars. Almost all the money in the system is created in that way by banks. But the banks are getting the benefit of the interest, and the fact that they have these huge interest charges, particularly on things like credit cards, means that somebody somewhere has to be taking out more debt and more debt. So this is what actually inflates the money supply. So if we can take back that function, if we, the people, if the state can use its assets, use its deposits, and use its capital as the basis for creating loans, it can lend to itself interest-free. So it eliminates that whole interest thing for loans to itself or for loans to anywhere that it wants to give interest-free loans, it could, because it gets the money back, basically.
You're an attorney, and so some people are going to ask, do the states have the standing to be able to form their own banks?
Anybody can form a bank. Walmart can form a bank. You just have to get a charter from the state or the federal government. But of course, in this case, we'd be talking the state. And so you just have to comply with the requirements for a charter. In fact, the easy way to form a bank is to take over one of these failed banks. You can do that quite quickly. And they've already got the FDIC insurance, et cetera. They've got the charter. Now, a state-owned bank really shouldn't be FDIC insured. Bank of North Dakota isn't. And it's not because they don't want the safety of FDIC insurance. It's because it won't help them and it will cost them a ton of money.
Explain that to us, because the devil's in the details. So if you could explain that, we'd appreciate it.
Okay. Virtually, the sole depositor is the state itself. Almost all the money in the Bank of North Dakota is the state's own revenues.